Hello everybody, it is Logan and I hope you are doing well. Today I really want to answer a important question which the market seems to be really ignoring and going against common sense right now, which it does frequently do this, but this is especially troubling in that the market is ignoring of much higher than expected inflation rate of 5.4% June year over year. Essentially that is the highest rate of inflation since August of 2008, which should be very troubling. It should be very troubling for the markets, but the markets appear to be shrugging this off. And if you look back roughly 2 to 3 months ago, April and May, that is when there was actually, I would say, peak fear of inflation going around in the markets. You saw inflation and hyperinflation videos all over the place, and just articles explaining why inflation was this enormous threat. And then mysteriously over the last 2 to 3 months, this concern has largely dissipated and gone away, even though inflation has gone up significantly in that period of time. So today I really want to discuss why this has likely happened and why this is incorrect, in my opinion, why the market is incorrect on this. The first factor for why inflation concerns have likely gone away has to do with bond yields falling, and this is actually something that I expected. If you go back to the last video I made of Dr. Burry's portfolio, I did mention in that I expected yields to correct lower after their massive run that they had had in roughly the first 4 months of 2021. However, it appears that the market has taken this consolidation and correction in rates as a sign that that is going to continue. However, I don't expect rates to continue falling much longer. I think that they've pretty much bottomed out here around 115 on the 10-year. I think that they will continue to go up starting about now, if not, I would give it at least a few more weeks, but I would really expect rates to continue rising in response to this much higher than expected rate of inflation that has come out. Another factor for why inflation concerns and just sentiment around inflation has gone down in terms of how worried the average investor is about inflation, I would pin to correcting gold and silver prices. As we know, gold and silver do extremely well in high periods of inflation during the 1970s and early 80s, for example, or mainly 1970s. Gold did extremely well. However, gold has corrected in the last 2 to 3 months as well, so that has likely made investors at least more cautious in terms of why or why not the inflation might be there. And it could have kind of spooked investors in terms of fully committing on an inflation sort of a bet like gold. So these are, I would say, the two main factors for why inflation as a mainstream concern has likely fallen. And the market has basically completely at this point accepted the so-called transitory inflation that the Fed has put out. And of course, I don't expect inflation to be transitory. I expect this inflation to be very long-lasting and eventually to force the Fed's hand into tightening. If you go back to my contrarian forecast video I put out roughly 2 weeks ago, that is essentially what I expect to be the trigger, or the very likely trigger to the coming bear market in the next anywhere from 6 months to a year. Is just the Fed eventually being forced to do QT just due to much higher than expected inflation. So obviously this forecast of mine has to depend on inflation actually not being transitory but continuing to accelerate. And I do expect it to accelerate for several reasons. The first and most powerful reason for why I expect inflation to continue to heat up is that inflation always comes with a lag. In terms of the central banking system, it takes a while for this massive increase in money supply, which we've seen in M2 just skyrocketing in the last year. It takes a significant amount of time, much longer than people normally think, for this to actually make its way into the economy and to cause price inflation, which we are beginning to see. We're beginning to see massive shortages in terms of labor shortages, in terms of supply chain constraints and everything. We're beginning to see that actually play out. And now that people are getting out and spending all of their pent up savings and whatever, pent up demand, whatever you want to call it. Now that that's actually happening, now that demand is really coming back with a vengeance and supply is not there, now we are actually beginning to see massive inflation. Now the real question is this a lasting, is this a permanent characteristic, or is it something that can go away really quickly? I think the answer is somewhere in between. Obviously with supply chains, that can likely be worked out fairly quickly. Obviously with something like price of food and potentially even labor, with so many people who have left the working force completely and just retired as a result of COVID, I do expect that to continue to be a pressure that pushes inflation up in the coming months. Also, in terms of the Delta variant, I think this could be another reason for why inflation concerns are somewhat going away right now. There's just so much noise around the whole Delta variant right now of this new spreading virus going around in different states, especially in Florida and some states that really didn't have as much COVID, original, whatever it was called, the original strain of COVID when it went around. I think that this is largely being overblown. I don't want to in any way diminish the potential harm that this is causing to some people. However, I would point out that the actual deaths resulting from this new variant are very, very low. There are a lot of cases of people being infected with it, but the deaths are just extremely low. I don't entirely know why. I'm not a doctor on that, but I would just point out that because of that, and just because of people being so fed up of lockdowns and everything at this point, I don't expect that to really be a major factor in terms of causing a whole other shutdown and people just going and hiding in their homes again. I think if the market is thinking that that will put a brake on inflation, that the market's definitely wrong. And I do expect this sort of market second guessing itself. I do expect that to go away in the next 1 or 2 months at least, if not sooner than that. I do expect a much higher than expected inflation to continue to come out, and eventually the market will just have to accept that it is going higher. I do think that rates going higher could definitely be a trigger for that as well. I just do think that rates, the correction and consolidation the rates on the 10 and 30-year bonds have had, I do think that that is coming to a close here. So with rates heading higher from here, I do expect that to contribute to the market actually waking up as a result. So in terms of how I'm hedging myself for this, as you know from previous videos, I'm long gold and silver miners right now. That is mainly what I see as a major beneficiary of this realization that inflation is here to stay. But all that being said, this is not to be taken as financial advice in any way, shape, or form. If you do like content like this, I do like to talk about investing in such a way that outperforms the market, which fundamentally means you will have to go against the crowd at times. Obviously, in calling for higher than expected inflation right now, this is for the most part going against the crowd. But anyway, if you like this kind of content, just consider subscribing, and I hope to see you again.